Hey everybody, welcome to Verified Pro Traders Live. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Thank you for joining us live. I'm joined by Dr. B and Ben, my two head traders, and we are going to go through lots of questions today. We're going to take those Q&A. I know people love to ask us and throw us, these lobbed fast pitch. We just got to try to knock it out of the park today, man. I think is the key. So I wanted to do this, right? So before we get into questions, let's talk a little bit about the current state of the markets. Give me your synopsis in 30 seconds or less about the markets right now.
There's euphoria at the top, and there's just dogs with fleas at the bottom. I mean, that's it, right? So you've got these two extremes that some stocks are making all-time highs, but not all of them. Other ones, though, are in the 52-week lows.
Yeah.
So there's this mixed bag of stocks, but it's really floating the S&P 500 up.
Yeah, and we know it's the trillion dollar names.
That's right.
There's three now that are basically $10 trillion, which is incredible.
Combined market cap.
Yeah, combined market cap.
Incredible.
It is incredible. So what about you?
Yeah, so I had Jim Wyckoff on the Market Pulse. And excuse my voice, I'm a little sick today. But Jim Wyckoff came on the Market Pulse several months ago, and he said something to me that resonated and stood with me. The markets are the most bullish at the tops, and the markets are the most bearish at the bottoms.
Mm-hmm.
And so I think we may be getting close to a top. It's tough to tell, but there's these trend lines on Qualcomm and topping tails.
Yeah,
we've got bearish divergence all over the place on the major indices, as well as Nvidia and a variety of other stocks. So yeah, it's crazy. Definitely euphoric right now in the markets.
Yeah, and that's the hardest thing about it. I still remember vividly in 07. I still remember I had some clients at the time that I was trading for, and I remember emailing them out a warning. And it was in 07 when I said, guys, what I'm seeing here in the charts and what I'm seeing here in the data, there's something big coming. And in all fairness, I was basically 8 to 10 months early, and I looked like the biggest fool for 8 to 10 months. And then afterwards, a year after that, then they were like, thank you so much I took out most of my money from the markets. And by the way, I knew people back then that left their money in the markets that were retirees, and they had to go back to work.
That's terrible.
Because it was because it was washed out essentially. So I think that's the key. Is I think everyone sees what's going on, and it's not healthy. I think the other day we had 61 new highs in the NASDAQ and 200 new lows. Yet the NASDAQ made a new all-time high. So I guess that breadth shows you that it's so few stocks. But in reality, how long can it go on? It may go on longer than we think.
Right.
Yeah. Well, we do a lot of reading and different articles out there. But for the first time since 1999, you saw the S&P weighted index versus the XPX, which is the index, the S&P index. That has diverged, right? And so basically the SPX takes a look at all of the companies, and then you have some like the big tech stocks that are heavier weighted. But when you equally weight the companies in the S&P equally weighted index, right, that has a much different trajectory from what the SPX is. And there's a divergence, and that actually happened again back in 1999, just maybe 6 months before the dot-com bubble collapsed, right? So there's so many different indicators and news articles out there talking about the divergences and the problems that are out there, and at some point it's going to correct.
Yeah. So let's turn our attention real quick to crypto. And I know you guys have come in and taken over Trader's Edge here at Verified Investing and are crushing it already. I think you already have 2 winners out just in the last week for members there. But what are you guys seeing? I mean, we see Bitcoin that's, generally it's still close to the highs. But how many charts of cryptos have we looked at, and they have these huge head and shoulder patterns that are breaking down on all of these altcoins?
Right.
And essentially, is that almost a replication of Nvidia being the Bitcoin and then the rest of them? I mean, there's this divergence in that stuff too, major divergence. What do you guys think about that?
Yeah, I've been noticing that there's a lot of cryptos 70% off of their just recent highs, and head and shoulders patterns on several different ones, breaking key trend lines. They're starting to become more of a sell-off in the altcoins, which is good for a potential bounce, right? So they're oversold short term for a bounce, but there seems to be some sort of divergence where cryptos are now starting to make newer lows, where Bitcoin is starting to make that higher, at least staying at the highs, right?
Yeah, it's come down a little
It
bit, but it's
has.
still relatively percentage-wise compared to the altcoins. I mean, some of these altcoins are down 50, 60% just from
Right.
their highs in March, and Bitcoin's only down, I mean, maybe 10 plus percent, right? From maybe a little bit more than that. But
Yeah.
yeah, there's definitely the divergence there. And so I guess the key is going to be is, if the market ever corrects, which eventually it will, it's going to be so interesting to watch, number one, what Bitcoin does and Ethereum does,
Right.
but then what happens to all the altcoins,
Yeah. Yeah.
right?
I mean, Bitcoin's staying pretty strong right now, essentially right near all-time highs. But if you look at the altcoins, in whole, even some of the most popular altcoins like Solana, right, didn't reach its all-time high from 2021.
Right.
So I think we look back at that period and say, wow, that really was a bubble of epic proportions in crypto. And you look now and you say, all right, there's all these bearish patterns like on AVAX, Head and
Head
Shoulders.
and shoulders.
Rune, we took that trade. Head and Shoulders is playing out, and so all of these bearish patterns that are setting up. But I asked myself the question of, all right, is it different this time with Bitcoin having the ETF approved?
Mhm.
Will it diverge from the S&P? And as the S&P falls, will Bitcoin break out? Bitcoin's still a risk asset. Crypto is still a risk asset. The altcoins tend to follow Bitcoin. Bitcoin's like the mothership, and so yeah, the question is which way does the market go? I'm leaning towards Bitcoin is overbought. Look at the RSI, look at the charts. It's overbought. But does something different happen here because we have the ETF approval? I
Yeah.
don't know.
Yeah, and I think you might be right. I think at least it gives people more potential to get involved. And I think every day that goes by, more and more people learn about Bitcoin, and more people get discouraged at what's going on in the government with the debt and the crazy amount. In fact, I just posted this earlier on Traders Insights, is that we basically, Europe is now pressuring France
Mm,
about their debt load, and we know that what's going on in Japan right now, with the Japanese are now starting to have to raise their interest rates, which is then causing their current. I mean, there's a lot of underpinnings of this global debt crisis. I mean, we in the U.S. focus on the U.S. debt, but in reality, the U.S. isn't alone here. All these countries are doing the same thing. They all did the same thing. They kind of took the playbook from the Federal Reserve and said, "Oh,
right.
I guess we can just print as much money as we need and run up these debts." And the markets were okay with that for a certain amount of time, but we know that eventually it all stops.
Well, the European Central Bank raised or decreased rates, for the first time ahead of the Fed, right?
Yeah.
For the first time maybe in history, I think.
Yeah.
So I don't know. I don't know what they're seeing that we're not seeing, but clearly, it might be a lot of stress on the European,
Consumer.
consumer
Yep.
economy,
And
and
I think
so
their inflation has come down. I was just reading this morning that the UK inflation has finally gotten back to 2%. I mean, that's
okay,
assuming you take the goods that they're taking in terms of the basket versus other goods. We know it's all dependent on what goods are being looked at. But it is interesting to note that we are seeing that in certain countries. And it does
mhm,
tell us that there's probably a slowdown. And I think we're seeing that more and more in the US. I was mentioning to you guys just a little bit ago is that in Tampa was singled out in an article I just read this morning, along with, I think, Austin, as being a place where housing prices are now starting to decline pretty quickly. And the concept is these were the places that during the pandemic everyone rushed to.
mhm.
And so builders started to build more here, but now everyone is, no one's rushing anymore. And so there's an overabundance of supply coming on the market, and it's driving prices down. And the idea is that's the beginning, but it will spread. But obviously these places that saw the biggest run-ups, which was the same in 08, 09, right? I mean, I think
Right.
Florida was the same way. It was the biggest run-up, or one of them, and then
Yep,
it took the biggest dive later on. So man, there's a lot going
a
on,
lot going on.
but I
Yeah,
know people are here to ask some
questions.
questions. So
Right.
so we'll get into it. Let's start with some questions, and we'll jump up to the big board and go over charts.
yeah.
So we have a first question coming in here from Chris saying, "I trade options using multiple strategies. Do you plan on having an options trading service again?" So this is the way I feel about it. Is for me, options are not my core. My core is trading equities and crypto, and so for me, I want to focus on that. But what we're doing is we actually have some big things in the works with some options traders that are 10x better than I am, to be honest. People that know all the strategies to generate alpha, even from selling options and all that stuff. And so the idea is that we're going to try to get the best person out there to do an options service. And that's really the goal. Is verified investing is supposed to be a place where the best in the world all want to come and be part of it. And then every retail investor out there gets access to that. It's almost like a democratized, like, Bloomberg, if you will,
Right.
but catering more towards younger generations, right? I think, how many people in their 20s are like, oh, I got to turn on CNBC this morning or Bloomberg. It's like, no, like what they're kind of spinning. I want verified investing to be the one on the cutting edge, kind of talking about the data, the underpinnings of the data. And you guys are helping me with that. And I thank you guys and all the other pros that are joining here. So yes, the answer is yes, we will have an option service. I don't plan on running it, but trust me, there are better people for that. All right, next question here. Let's see what we got on the next board here. If gold doesn't break the channel, if it reverses up, could gold be in a wedge bull flag? All right, well, this gives me a chance to go and stand up. Oh, yeah, good to stand up. All right, so let's get into the charts on gold here, guys. Let me bring it up. Let's talk a little bit about this. And so what we do here is here's our gold chart. And when we look at gold, we can clearly see that gold had that massive run up, right? The big breakout. If I zoom out on the daily chart, you can see I have a trend line right there that was basically in consolidation. And by the way, inverse head and shoulders. I know Dr. B and Ben, we all know that pattern, right? So that was a bullish pattern. We alerted everyone to that pattern, and it finally broke out. And it had this meteoric, at least for gold, it was meteoric. If this was Nvidia, you'd be like, well, that's nothing. But this is gold, and it doesn't move quite like Nvidia. Maybe one day, though, we'll see. But either way, if we zoom in on this, you're right. So we have the bearish short term, and this is the key, is that you want to look at the different kind of time frames. When you're analyzing a chart, you look at number one, if you're a swing trader, daily chart, then you want to expand to the weekly and the monthly. And as you get, so when you start out very close, you're looking at what is the shortest term move likely to happen? What's the biggest probability? And right now it's this channel, which is slightly bearish, right? So we have this little channel. This is inside of this drop down, inside bar. The short-term move should be to the downside based on probabilities. Now, every pattern formation has a breaking point, okay? So as a trader, and this is what a lot of people don't understand, they say, oh, well, Gareth says bearish, and if it goes up, he's an idiot, right? I am an idiot in many ways. This is true. But having said that, you have to understand that this downsloping trend line would negate this pattern. So if we start getting a close above that, that would, to me, now shift probabilities. And I always like to use the analogy. You guys, we have poker players out there. We've all seen World Series of Poker. When you see the cards, you see the odds right below. And then when a new card comes over, you see the odds adjust. And that's really what happens here. So if price on gold were to get above here, all of a sudden the odds go from, let's say, I don't know, 70% to the downside. Now all of a sudden they shift to probably 60% to the upside. And then again, if you can really start breaking some of these previous pivots, the probabilities of upside even increases even more. So to answer your question here, again, could it be a wedge pattern? The answer is yes. But within that wedge, in the very least, you'd expect a down move to retest that. And then once we get there, we have to watch to see if it breaks. If it breaks to the upside, now you expect further upside on the chart of gold. All right. So good question there. And I love learning how to read charts, and you do see that bigger wedge pattern, and that is absolutely on my radar. And it does give us a way to analyze when this bearish pattern gets negated or it starts to play out even more below here. All right.
Can I add just a couple comments to that gold chart?
Absolutely.
If you zoom out on that gold chart.
Come on over.
Yeah. So you take a look at the gold chart. So one thing I noticed is there's actually a topping tail here that hasn't been negated.
That's right.
I don't think this has been negated.
It hasn't.
Yeah. So there's a topping tail right here. And typically this is the breakout point, right? Typically what you see is you see a breakout and then a retest and then a move higher. So what I'm seeing here is a potential setup. This is a descending triangle, so slightly bearish, but at the same time you do have this move up and then a bull flag, right? So possibly a move up. It's tough to say, but this might be the breakdown here for a retest and then a move higher. So just some thoughts. Actually, it would go down to this line, right?
Yeah.
Come up. So
yeah, no, that's perfect right there. So, and I think that's important. That's what we talk about in terms of looking at the bigger time frame, right? So you do have this breakout. Oftentimes, I'd say about 60% of the time, at least, you do a retrace to the scene of the crime, and then that's your springboard to make new all-time highs on gold. But again, in the shorter term, and this is the nice thing about looking at the shorter term, we kind of get signals, right? So if we were to break this line here, you then go to your next line. If we break that line, you go to your next line. So you take it stair step by stair step so that you get kind of a play by play and kind of understand where probabilities change and adjust. All right, we'll go to the next question here. Kevin saying, can you tell us what Tony V and Paul are up to? We have not seen them on the regular shows recently. This is a great question. So let's talk a little bit about this. So first of all, Tony had a whole nother business. By the way, she's amazing. She was so awesome on the trading the close with me, but she had a whole other business in fashion, and it was just starting to blow up. And so it became a situation where she said, listen, I have this amazing career on this side, and I love doing the news with you on financials. But for the most part, it was a matter of where does she put her time, and she wanted to put her time into this business that was blowing up in fashion and everything else, which we totally think is awesome for her. Yep. And to be honest, we wish her all the best. I know we all miss her. She was awesome here in the office, but she is off doing what her passion is. And then in regards to Paul, I mean, basically, I think with Paul, he's a great dude. He was doing great stuff and then we get the little checkerboard in the back, but we basically verified investing requires a certain amount of input from and time commitment from verified pro traders. And he just, with the stuff that he was doing in life, it wasn't seeming that he was able to devote that type of time. And so for us at Verified Investing, it was one of those situations where it's like, listen, our members come first. People that are on the website are always number one in my book. And so what we did was we said, all right, Paul and I, we had to sit down and he said, all right, I'm going to move on. And we had you, Eric's not here with us, but he's a pro trader that's with us, and Ben. They've all joined forces. So what's amazing is Traders Edge Crypto now has 3 pro traders that are doing videos, chart posts, scanning crypto.
One live per week.
Yep. Yeah, one live per week. That's right, where you get to ask questions. The members get to specifically ask questions about positions or thoughts on charts. To be honest, it was one of those things where it's like, okay, this was a good service. It could have been better. And not only did we make it better, but we made it way better with 3 pro traders in there for scanning crypto and giving crypto insights and education and live. So that hopefully gives everyone a little insights into the different changes here. And by the way, I love that. I love that you guys can ask about these changes, really making verified investing an open book for investors. Okay. All right. On to the next question. Let's go to it. Can someone with no trading experience benefit from the Winning Trader Series course? Wow.
I think so.
Absolutely. Yeah. Absolutely. And by the way, the Winning Trader Series, 20 hours, I start really from the very beginning. And what I mean by that is I start from the beginning of my trading career and walk you through all the trials and tribulations. And to be honest, way more trials. I mean, like, man, oh man,
it's actually pretty humbling to hear, what you went through. And
there's no doubt about it. As a trader, as a wannabe trader back in 2003, I mean, I started dabbling in trading in 99, actually, but it was really where I started to devote myself once I got out of college. And it was, yeah. I mean, I was literally working 3 jobs just so I could fund my account. Like I would lose money and I'd be like, all right, well now, I just got to keep working and just take that money and rotate it into my trading account. Oh, there it goes down again. Okay, rotate it. And, it was kind of like a wheel spinning, but I was like, I mean, you guys are the same way. I see it in that way, and the way you guys have come up, it's like there's no other option. It's like this is what we want to do. This is our passion. We are going to make this work. We're going to take whatever lumps we take, and we're going to make them into lemonade, or and I think that's the key, and that's what the Winning Trader Series takes you through. Is a lot of the baby steps in the first course, all the way to the learning the technicals in the second course, and then all the proprietary stuff like time counts, the confirmation signal in the third course as well. And so I think you guys would agree is that, whether you're just starting out or advanced, there's so much information.
Well, I think it's not just for trading, right? I think there's a lot of life lessons there, right? And it's also important for your investing career as a whole, right? Because I'm sure many of you will have long-term investments, and also may trade, but the concepts and the theories help you for your long-term investments as well. Right. So really kind of a complete.
This is also something that it's not just a sit down one time and you're going to understand it. Like this is something you can go over 3, 4, 5 different times, and you'll pick up something new every time in each of the modules. And so you think you know it after the first time, and you watch it again, and then you realize there's a little other nuance that that you pick up on this time that will benefit you going forward. And so, yes, absolutely, it'll help you in the beginning, in the middle, and at the end, like benefit the whole time.
And I think one of the things that I realized, and I think you guys are starting to realize more and more, is that the concepts in the Winning Trader series and just being a trader overall, the mindset about not FOMOing in. I mean, it's helpful in like literally every angle of your life. Like you want to go buy a house, you analyze the charts and you don't get caught up in the hype when buying at the highs, right?
Exactly.
You know, you get the same kind of mentality and you start to kind of become very logical and very, very decisive in your actions because the discipline is so key in trading. So all of these things kind of come through in being a trader. And we have, you know, you have your 1 minute scalpel course, which goes over other tactics like that. And Ben, you're coming out with a course hopefully in a couple months. And I'm excited about that as well, because Ben has some interesting insights that are very helpful in trading in terms of signals, when to buy and when to go short. So pretty cool stuff there. All right, we'll go on to the next one here. How do you feel about Zoom after the new low, waiting to revisit the scene of the crime, then higher? Yeah, so this is the key, and this is one we've discussed in the office here on the trading floor quite a bit, is that this is a great example of what you said when we started out. You said there are stocks that are unloved, and then there are the few that are very loved.
That's right.
And valuation doesn't really matter, does it? I mean, that's
not currently.
Apparently not, because Zoom is trading at a forward PE of
12, right?
Yeah, I think it's even lower now because it's fallen.
Right.
We'll jump to the chart in a second. But it's one of those things where, for me, this is one that I'm willing to tuck away. Even if the market falls, I don't really see it being one that really goes that much lower. And then, by the way, that still could be 5 or 10 or 15% lower. But in the scheme of things, right? Would I be more concerned holding something that's up 300% this year, or be in Zoom down here with valuation metrics? And then we look at the chart, and we can jump to the chart here, because you're right, it did break some key levels last week. But I almost get the sense, and you guys could correct me if I'm wrong, and you are down into some interesting support down here, right? So we do have this level right down in this lower range. Let me move this out of the way just in case. But you can see it's right down in this lower range here, down from about $63 down to 56. But again, you're basically at 52-week, almost all-time lows at this point on Zoom. And earnings last quarter were pretty solid. They basically kept guidance the same. They might have even raised slightly on their guidance numbers.
They're sitting on a pile of cash.
Just sitting on multiple billions of dollars in cash with very little debt as well. And so for me, going into a cycle where we might be going into a recession, Zoom is one that is, for me, it's a dollar cost average. It's just slowly every 5-10% drop, just inch in a little bit more and build that pile. So that at least is my perspective on it. And I think, again, you have the love stocks in this market, and we know what they are. I mean, basically the $1 trillion names, and then there's some ancillary ones like Qualcomm and ARM Holdings. I mean, basically anything that has anything to do with chips and semiconductors and AI has been loved. Everything else, honestly, what I think is going on more with Zoom is that you have people probably selling Zoom because they're FOMOing and taking that money into Nvidia.
Yeah.
AVGO.
The moving stock.
The moving stocks. They're FOMOing. And this happens in every cycle, by the way. Is that, if something's not moving and you see everything else ripping to the upside, you get really crazy almost. You like get emotional and you're like, oh, wow, screw this one, sell it, right? And then you take that money and put it in. The problem is that's usually doing the wrong thing at the wrong time. And again, putting money in at these highs, listen, it's not to say Nvidia can't go up more. It probably will. Right. But at some point, this comes back down sharply to the downside. So,
I'm just taking a look at this chart, and you can see this trend line along the top here. And you see, I actually just had a show on the Market Pulse episode on the Market Pulse about bull and bear traps. So this is a bull trap right here, right? So here is your second or third pivot from that pivot over there. This is a bull trap, came from around 74, 75, all the way down to about 60. So, this could be, again, I may, readjust the trend line a little bit just to make sure we're perfect, but this could be a bear trap forming.
That's what I was thinking too.
And then if you look at the weekly chart, let's pull up the weekly chart. I mean, this company
zoomed out. Zoomed
out. Yeah.
There you
go.
So, look at that. Isn't that crazy?
Actually, I would go out even a little further.
Let's go out further, man.
But look at this. This looks like a crypto, and this is a company we use Zoom every day.
And that's why I think that's my thinking too. Is like even if companies downsize in a recession, are they still going to keep their Zoom their Zoom account open and be paying Zoom? The odds are
Most
yes,
likely,
right?
yeah.
I mean, like, unless the company goes totally out of business.
Right.
So for me, at least, you look at this chart at these dead lows, especially with the money that they're making, the cash pile they're on, and it makes sense. Now, listen, you could say, hey, listen, there's so many competitors out there, et cetera. But really, I mean, for the most part, pretty much everyone still uses Zoom. I mean, yeah, there's a few other players out there, but Zoom is still the go-to for business meetings. And my guess is it'll continue to be that way. So anyways, at these valuation levels, I continue to like it. But yeah, we can take another question here. We'll see what the next question coming up is. I'll stay here just in case. Advice for a 20-year-old learning to day trade. I'm 1 year in, still not profitable, but definitely improving. Wow. Well, I'm going to come back and sit down for this one because
Go ahead, Ben.
this is like talking to me back in the day.
Why don't you start, Ben? I think we all have our thoughts on this.
So advice for a 20-year-old learning day trading: stick with it. Just know that it's a 20-year plan, right?
Yeah.
So I would say that if you're in it to make quick money right now, you're probably end up going too heavy. And if you're looking at it for a long term, like, you don't need to stack. You don't need to make a lot of money in a little bit of time. You just need a little bit of money over and over and over again, and that money can stack up. So it's people who want to get in, and a lot of crypto people are like that, where they 2 or 3 or 4x their leverage. They get into trouble, and then they start making mistakes. So keep your position sizes a little bit smaller, manageable. And if you notice yourself getting too heavy in a position where your heart's racing and you can't wait to exit the position like as soon as possible at possibly a break even, then you've probably gone too heavy.
Yeah.
And scale it back. You want to stack the wins over and over and over again to prove your methodology or prove what you're doing is correct. And then that's when you slowly start to build your position sizes. So
yeah, that's awesome.
That's what I would recommend.
Yeah.
I guess we'll go around the table here. So first of all, you're 20 years old. I wish I started, understanding the markets at 20 years old. For those of you learning this now, you'll be able to teach your kids. This is a lifelong skill.
That's right.
And you're starting so young, so just take your time. There's always another trade. I think the couple things I would say is, if looking back, what I would have done differently, I would have started with a paper trading account first. I would have studied more, and I would have gone smaller in my positions, right? So those are, I think, the 3 things that will keep you safer. Study, 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 study. You absolutely can do this. And then as you get more advanced and feel more comfortable and start to increase your position size, the key is keeping your losses small and letting your winners run. It's just a mathematical, probability and certainty, right? That if you keep your losses small and let your winners run, you will make profit, over time. So yeah.
Yeah. No, I think you guys said it for the most part. I think, looking back at myself at 20, it was the dedication and the unwillingness to change my course that kept me straight ahead, because God knows I had many times where, the account got blown up, and I did question whether or not it was in my destiny to be a trader. I mean, that's really what it was. And like, I still had visions. I'm like, man, if this doesn't work out, I'm just going to give up on life and go work at McDonald's or something. I mean, like, that was the mentality. And like, I was like, oh, I'm not doing that. Like, that's not the life for me. So I was just going to do whatever I had to do, side jobs, like we talked about in the Winning Trader series that I go over, stuff like that. And I think, again, the key here is really, like you guys said, is start small. Education is so, like, the reason why it took so most people can, if you study, just like being a surgeon, right? You can do it in a few years, like studying hardcore. That's your one dedication. For me, I didn't have any guides. I didn't have a Winning Trader series. I didn't have a service like we provide, whether it's the Apex Live Day Trading Room, which is just filled with education and trading constantly. And so I kind of did it blind in a way, right? Hey everybody, welcome to the Apex Live Day Trading Room, where you're getting multiple pro traders with decades and decades of experience calling out trade signals, as well as their own trades, entries, and exact exits for you guys over your speakers on your computer, your phone, your iPad. In addition, you're gonna see our screen. So you're gonna see as we move our mouse on the screen, on the chart, all the data, all the information that we're doing as we're making money as traders. We are translating that to you guys. Lots of education, literally from 9:30 to 4 p.m. with a small lunch break in between. Everything you need to make money as a day trader right here at the Apex Live Day Trading Room. Are you going to pay the market to learn your lessons, or are you going to learn them and spend the time and pay for educational course material?
Yeah.
And the cheaper one is the latter, to pay for good courses, for good mentors and stuff like that. So yeah, man, it's been I can't believe I've done it for 25 years now. It's kind of crazy, man.
Well, the other thing I would say, and I love quotes, is, and I made Bach this quote, but do what's tough now so that later it will be easy, right?
That's right.
If you lead easy life now, later it will be more difficult. So
Yeah.
so that's key. Yeah.
Great question.
It is a great question, and I think we can all look back at being 20 years old, and there's a
Man.
lot of things we would do differently, I think, at this point. But here we are, and we're doing all right. So, all right, next question. Let's keep it rolling. Palladium is already back up again. If gold drops, how low do you think Palladium can go? It's a great question. Wow. So Palladium, you guys know, it's been one of my favorite positions that I've accumulated in smart money commodities and miners, that service that just features commodities. And you're right, it did pop a little bit. I was just going over in a video this morning to members about that. And so, in fact, let's take a look at Palladium and just kind of see what we got going on here. If we look at Palladium, so there's different reasons to buy Palladium. One of them is that it is an industrial metal. It's used in industrial factors, and therefore, if the economy suffers, then you would assume it would go down, and that's valid. That's 100% valid, and you may see that pressure on it. And here's the Palladium chart. And we can see that today, little nice green, little up candle, not a huge one, but we do have a ton of support down here. The reason why I'm a fan of the metals, and specifically gold, silver, and palladium and platinum, is because of my views on the macroeconomy, right? If you look at the macroeconomy and you see that there's no way out of the debt that the US is in and the global debt without printing more money until we get some sort of meteoric collapse in the system, then it makes sense that something like palladium, which, by the way, is 30 times rarer than gold, and it's priced, by the way, at less than half of gold, should increase in value. All right. Now, yes, there's a lot of demand via industrial. It could suffer. But again, if you're just looking at apples to apples, more money in the system, more dollars printed, more global currency printed, lower interest rates, more inflation, and something that is 30 times rarer than gold, it makes sense to me, at least, that there's some upside here. And again, by the way, we saw during COVID, when the COVID panic happened, you still saw a quick flush in gold. So you could definitely see that in palladium. My guess is, though, it will recover like gold did and make new all-time highs as well. And so the beauty of this chart, by the way, is that if we zoom out on this palladium, look at this, guys. Look at how low it is from where it was even just a couple years ago. So if we just go back to 2022, I mean, this is a chart that if we were looking at it on a swing trade basis, let's say it was a stock, we'd be like, major support levels down here. This was back here. And ultimately, there's got some upside. Now, you have a level where if we can break out above this, I think that's your trigger for a bear move. I'm trying to preemptively accumulate in this lower range, but I also understand the risks that when you preemptively accumulate, they could try to flush out the longs, the weak-handed longs, with some sort of dip. But yeah, I mean, ultimately, what you're saying is if gold does pull back, do I think palladium could come in a little bit? I do a little bit. But also, if gold pulls back, in theory, you would think people would have a more positive view of the economy. And that might be good for palladium in that respect as well, because it's also that industrial metal. So my guess is, again, I have this level down here that I'm watching. If I zoom out on this, let me see if I can find out where that line's coming from here. Yeah, so you can see, and again, it might be a little hard to see because I have to zoom out so far, but there's this flat bottom here. There's a pivot high here, and then right through here. And that would be that secondary level. I think it's around $750 here on palladium. So there's a chance that it could go a little bit lower. But I think, again, risk reward, if you have an outlook of 6, 12, 18 months, I got to believe that palladium's headed up. Do you guys have any views on it? Or?
Well, I was just going to ask to see the weekly chart real quick.
Yeah, absolutely. Let's flip over to the weekly here.
This looks like the Zoom chart.
It does kind of look like the Zoom chart.
Yeah. Yep. That's a great trend line right there.
Right here.
Yeah. That yellow trend line.
Yeah. Yeah, you're right here too. Look at that. right through there, right
Oh,
through
yeah.
that low, and that actually is right at 850 right down here. It's all there's so many supports on here on a technical basis that again, to me it makes sense. I do have a line all the way down here just because I wanted to see how low it could go. That's probably not likely. That would be the equivalent of gold going back to 1200 probably. But listen, you just want to keep an open mind and diversify, right? For me, for my metals, I'm mostly gold. But of course, I have some palladium, some platinum, some silver. Don't have any copper, but I'm probably in household materials. I have some copper there as well. But yeah,
Awesome.
cool. Let's take the next question. What steps do you take when you analyze a chart for the first time? Trend first, volume channels. I'm gonna let you guys take this because I think you guys have some great insights
Go ahead,
on
Ben.
this.
Yeah.
So
we can chime in too.
the first thing that I do is my eyes, when I pop up a chart for the first time, I look at a pattern. Like that's the first thing I do. There's a pivot high here. There's another pivot here. Does it connect here? Is it forming some sort of like a head and shoulders pattern, inverse head and shoulders pattern? What are the gap fills, like all the things? And that's just what happens in the first like five seconds. And then I start to look at, okay, so if there's a down sloping trend line and an up sloping trend line, well, where is the next level of support that this could go down to? And then that would be an entry point. So, and then maybe I'll look at volume. And if I've already analyzed it, then I'll start looking at the trend line. So if there's an upsloping trend line, then I'll start to try to formulate a channel. So maybe I'll take the trend line tool, the parallel channel tool, and see if there's a parallel channel to help me with the thesis of if it's going to break down or break up.
So let's
yeah.
And I think that's good. I think the key is like the first thing we probably all do when we look at a chart is like, what's the big picture? Like when we bring in that chart, what pops out at you?
Yeah.
And that's really what we want. We want something like to pop out like, oh my God, there's an obvious head and shoulders, or there's, oh man, look at this upsloping trend line that just kind of is very apparent to us. And that's the first take. And then once we probably do that, we do a deep dive, right? We're like, okay, well, we see a general pattern. Now let's go look for those entries. And this is where volume comes in, right? So like, I know you are keen on the volume in terms of reversal. Both of you guys look for, if we're looking at a topping tail, it's got to have volume with it. Otherwise, you got to be like, not really a good bottoming tail or topping tail. Same thing for other topping and bottoming signals. So in fact, let's do a practice. I'm gonna bring up a chart, Ben. I'm gonna just random chart, and we're gonna see. You're gonna have to analyze this. You got to come up to the big board here.
Sounds good.
Let me see here. Let's see. All right, let's do this. I can't have one that has. Dang it! Most of the charts that I think of. Let's do SentinelOne here. Here we go. All right, random chart. SentinelOne. Give us your insights on this. And you can feel free to flip to weeklies, monthlies, whatever you want to do. This is your game.
All right. Well, the first thing that I see is
through here.
There's a parallel channel. I mean, not a parallel channel. So there's a trend line right here.
Oh, look at that. That's good. Yep.
So I like to connect the highs on the channels. Excuse me, on the trend lines. You know, some people could take it right here and say that, okay, so it's tried to get above it and then came back below, and now it would be retesting that level. And then I'd zoom out a little bit more and see where it could potentially go down to, if it's going to go any lower. So then I take this line here. Okay, so this looks like it's a flat or a horizontal line. So if this chart was going to hit this level, my guess is it's going to come back down to the retrace the scene of the crime. I mean, to this support level around 1278. Then I would take, all right, the parallel channel tool, and I'd come here and say, all right, so I've got this trend line right here. Does it coordinate with other levels? And look at this, right? So it looks like it's inside of this parallel channel right here. So it's actually hitting the upper end. I'll zoom in a little bit more. It's actually hitting the upper end of this parallel channel. So for me, it gives me more indication that it's going to come down here. Probably your support level would be either around, I would probably enter this trade around the $12 mark. So another thing that I also look at is like you've made this nice bull flag, right? So you got this up move, sideways consolidation, a little bit of an up move, sideways consolidation. So although it does possibly favor a pullback to here, you got to wait and see if it's going to chop along this area a little bit more. Then you can look for a breakout. So right now, although it favors the downside, you wait for additional confirmation of a breakout above that parallel channel.
I think from what I'm seeing here too is like, basically you have two factors down at that $12 level. You have the low end of the channel and that flat bottom.
Yeah,
So
right
that
here
would help as well. And then I know you do this as well, but like, let's try to find a third factor, right? Three factors is the golden factor, right? I mean, that's if you get three, your odds of success. So is there like, if we zoom out enough, is there a fib we can do? Like basically you start kind of trying these different technical factors, right? To see if there's anything else that is in the chart. You have to unfreeze it for us to see the movement if you're moving it there. But
all right.
So we use RSI a lot, right? So you might consider pulling up the RSI.
When I use RSI, I don't use it on a daily or weekly time frame. Right. I haven't used that yet. So we could check out a fib levels. So this is the 786 from the highs. So I don't have another level here.
If you go to a larger time frame, is there any lower below that trend line
for SentinelOne?
Whoa.
No, it seems to be the all-time lows.
Oh wow, okay.
So for me, yeah, that'd be great support. You get this pivot right there.
Interesting.
So unfortunately, I don't think that there are additional factors. At least
what about can you connect that sideways consolidation? But the highs of that part right there. Yep.
I see it.
Yep. Down to that big red candle drop. I'm just kind of curious.
There you go.
Yeah, so that gives you an additional level of support right there. I mean, it's a little lower than the $12 level, but it would basically give you
an ad level.
Right, an ad level. If it pierces that 12 and maybe dumps out a little bit more, maybe. But again, at that point, you're at all-time lows also, and you'd have to factor that in. So you'd have to determine, do you keep a hard stop at a confirmation below 12, which is the all-time low break, or do you dollar cost average? So there's multiple ways to skin a cat, right? You can do either one. Cool, man.
Yeah, I think this is a great question. I think we should all review a chart. So why don't you pull up one for me?
You guys have to pick. You guys pick one here.
Go ahead, Ben. Pick one.
Pick a random.
For me. Yeah.
A random chart that you haven't analyzed.
There's got to be something. Let's see. You could do one of I haven't looked at. I don't know. SE in a while.
Okay, let's go SE.
All right, erase any trend lines on it. I want to see.
Well, you'll go last. The master will go last.
Okay, so
I'll go next.
SE.
All right, so SE. So no trend lines there.
There we go.
All right, let's see what let's take a surgeon. The surgeon is in the building. Let's see what he's got.
Let's see. Okay, all right. So SE. So can we see this? All right.
So you're on a weekly. You're starting on a weekly.
So
is that what you would usually do, or you'd start on a daily?
Yeah, typically what I do on any chart, right? I look at the weekly chart, and then I start to go in on the daily, right?
But this is for probably swing trading.
Yeah, so what I was going to say is long-term investing and swing trading, I stick to the weekly and the daily, right? Then if I'm day trading, I'll still start on the weekly, but I then will go in and go into the hourly and the 10-minute and then even to the 1 minute. So
we'll focus on swing trading because most people probably watching are swing traders.
Perfect. So what I have here is a very clear trend line that's up here. Okay. Now this stock has moved probably about, let's see, 100%, over 100% move. Okay. Let me just turn this off here. So then what I would be looking for is a short. Okay. So I'd be taking a trend line here.
Well, look at that trend line.
So very clear trend line there. And then what I would come in and do is I would look for other trend lines. I'd say, okay, is there another trend line here that might help me make a trade on this stock in a short position? So you can see here you have this pivot low here, this pivot low. Let's see if that connects. Let's see if that connects somewhere up in this range.
Yeah, it's right up there.
Yeah, right up there. Okay. Then what I would do is I would say, all right, well, let's take a look at this trend line here. All right, so you have a trend line there. All right, and then I would also look to see, is there resistance on the top? And really, what this is, it's probably a parallel. If I were to get my parallel tool out, so what I'm starting to see here is a lot of lines converging in the same area. Another thing I'm looking at here is my pivot highs over here, right? So you have some pivot highs here, all right? You have a pivot low there. You have a pivot high here. Let's see if I were to draw a line somewhere in that area, would I find some resistance, right? Let's see. So a little higher, right? So this might be my ad level. You also have a gap fill up here. You have a gap fill right here. Okay, as well as another pivot high. So this is like a double top. So what you can do there is then draw, again, another trend line. All right. So what I would do is, another thing, I would pull up a Fibonacci tool. So here's my fib. Oh, it's a little off here. Let me see if
Yeah, I think when I do it, sometimes I don't like to show everything. It gets too complex, but
let me see if I can pull up some of the
there you go.
typical.
More lines, the better, right?
There you go.
Yeah.
So what I did is I pulled the fib from the highs here to the lows, and you can see that you're coming right into this 786 level. So we have a couple factors here. We have number one, a fib level 786. You have a trend line. You have two trend lines right here, this downsloping and this upsloping trend line. And then what I would do is I would look at RSI, for example.
He's right at the top there if you want.
There we go.
Favorites.
So RSI, you're starting to see some
Oh,
bearish
yeah.
divergence, right? So bearish divergence right there. So really, I've got a three-factor trade right here.
Yeah.
It's a three-factor trade.
If it gets up to, what is that, about 76, give or take?
Yeah, about
78.
70, 78, and if let's say that the price continues to chop along here, I would probably add here at 82. And then if we were to take this trend line, okay, up to here, and the price were to come along and chop here, I would add right in here at 88. And my average would be, say, somewhere around 82. And I'd probably take profits, down here somewhere. So
Nice, man.
yeah.
It's a lot of lines, but I hope everyone sees how it kind of all comes together. Like, the lines that don't align don't even matter. Like, you almost, as a trader, you almost kind of ignore those at that point, and what you're looking for is 2, 3 trend lines or fibs all within that small area, which gives you that multiple factor trade. And remember, folks, it's one factor, maybe 55% probability of success. If you get 2, you're probably up of 65 to 70%. If you get 3, you're north of 75% success rate. Now, remember, that still leaves 25, 20% where it can fail and you can be wrong, and we're all wrong a fair amount of time. But again, it's about being the casino versus being the gambler. You got to just, if you do 100 of these trades and there's a 75% chance of winning on them, the numbers will work out. You'll still have 25 losers in 100.
Which is why you start small.
Right. Start small.
You can dollar cost and maneuver.
Absolutely.
100%.
All right. So what chart should I do here?
Let's see, Ben. Ben, you got to help me out with this.
I was going to say WBA.
WBA.
Have you?
I don't know. Let's see. Oh yeah, you can see, I totally
No,
analyzed that. I've never looked at this one before.
Do that.
Yeah.
Pfizer.
I'll tell you what. Let's take a look here. You want to look at
about
Pfizer?
GM?
No,
What
let's
about
look.
GM.
Oh, GM, I haven't looked at. That's a good one. I haven't looked at that recently. You can erase. See, the lines are semi-old. All right.
All right. So here we go.
All right.
Take a look. What do you
Let's
see?
See what we got here. All right. So let's take off the RSI for the time being. Let's refresh that chart. All right. So we got GE. Bring up the chart daily. Daily's where I start, and then I'll go out. I'll go to bigger time frames or go to in. But first off, right off the bat, this to me looks like a parallel, or at least a good trend line, right? So let's start with our parallel, because again, parallels are more powerful than trend lines. To me, they kind of just take slight priority. And so what we'll do is we'll draw this here, and then we'll drag this up to this level right up there. And basically what we get is, you can see you had kind of like what we had on that other one. You had this little bit of a bull trap right here where it got above, probably made people look at the reversal engulfing candle right there, and it came right back in. But very clearly what we have is we have a pivot point there, and then the bull trap there, almost got there, and it's kind of up in this range. And then we do have this connector down here to here. And to be honest, you can see right around the midpoint, there's here, and here, right through, and even we're right in that range right there. So there's no doubt that there's something here. Now, again, we could adjust the parallel slightly potentially to give us other factors, but right now we'll leave that be. So now that I have that, I start looking closer at the chart, and we'll go out. Do I have any topping tails? No, a little bit of a doji right up here, a little bit of a minor doji, but not enough to get my attention. So we're just kind of hovering in this channel for now. Now let's flip out and let's go to let's zoom out on the chart a little bit more. Let's look at past history. And so one of the things that gets my attention is that there was a pretty significant breakout right in this vicinity here, right? So price got above that. So that's giving me a baseline. If it were to drop down, that could be some good support. You have a secondary one right below that, right down in that $42 range. And then going back here, what I'm seeing is a pivot high here and here. And what if we draw a trend line? Does that give us any confluence of the channel going up? Let's see. Could be, right? So for me, again, and I think the first things first, I'm not seeing anything on this chart that would be like, oh my goodness, this is like a no-brainer short or long right here. It's honestly a no touch to me. But what I do like is that if we extend this channel out and then drag this channel over, right, we get that. Then potentially if this were to continue to, let's say it just stays in like this and we get up in there, now I have two factors, right? So now I have two factors on at approximately a position 53.5 bucks. All right, so now I want to try to find a third factor. So what we do here is I need to go to my bigger time frames again. Let's refresh here. Now, what about a fib? Like I see this high up here to this low, and I'm just curious, and I don't know if this is going to be a fib, but this is one of the things that we try to do. We take our highs, we drop it down to that low, and it looks like it's just that level would be just above a 618. I don't know if it's close enough to be considered a factor, but it does give us a little bit of a zone right in there, right up in this upper range cross. You have the 618 right below right there. So just a little bit of a tidbit there. I'm just trying to look and see if there's any other things here. I'm going to take away the fibs here. And then I just want to keep going and zoom out a little bit more. Is there any sort of upsloping trend line here that would get me? So we have a trend line there. That's a no-brainer trend line there, but that does nothing for me. It just gives me support on a pullback. Right up there. Nope. Right up there. Nope. Right up there. Nope. Nothing there. And let me just see if there's anything else here. This pivot high to here. Nope. Nothing there. There's actually a lot of resistance right in this range, though, just based on this line right here being a former pivot point right there. But yeah, so I mean, just looking at this, and again, by the way, once you analyze a chart and you start having to go above and beyond to try to justify a level, it probably means that there's not the greatest of levels there, I would say. It should be a lot easier, right? It should be almost like the dots all connect very simply to give you that level. But if I had to make a trade on this, I would probably be looking for it to continue up in this range, potentially into these lows right here. That would give me at least a two-factor trade. And then on a pullback in terms of a buy, I'd have to kind of see what we're seeing here. But there's this trend line down here. I mean, that's if we went into a recession, that might be a buy down the line. And then there's still this area right here, which would be some support right in that range. All right, critique me, boys. What do you guys see?
Well, one thing I'm looking at, and this is what we do all day, every day. I'll take your pen there.
Yeah,
so one thing I'm looking at here is.
Oh, wait, I have to redo it here.
Redo it. Okay.
And give it a sec.
Yeah, there you go.
You're good.
So let's take a look. Maybe is there a trend line?
Could be
right through here, because what I'm looking at is this is a pretty big pivot low, decent pivot high, and maybe this is actually the level where, and you also have a midline here.
At the midline, you do have the midline,
and so anyway, these are this is what we do all day, every day.
Just also got an M pattern.
Yeah. Oh, that's right, M pattern.
Yeah, this is technically the A retrace right in this zone.
Yeah.
Looking better and better as even a potential short here. One other thing I want to try here is what if we, let me freeze that again here. Come on. Let me do it. There we go. So if we erase these lines, I just want to do one more parallel. I'm just kind of curious about this. And this may turn out to be nothing, but this is, again, like Dr. B said, is all day long as we're doing this in the office together. And it's actually an amazing, not only for just like the brain trust of learning, but we find amazing trades. So what I'm doing here is I'm doing this, and then I'm just, look at that.
That might be the level.
This might be the level.
You know what? I think
at
it's
least worth a shot.
Did
you guys see what I did right there? Just to show everyone, I took the low from 2020. That's the COVID low. Connected it to the recent low right there. Dragged it up, and look, it goes right through that high, and then we just tagged that same line right up there. So
awesome.
Yeah. So I think again, I don't know if this will be a trade that I personally take, but I would definitely say that probabilities favor a pullback here based on multiple trend lines converging at current price. And then if it does go up, you do have that secondary up channel zone with this low here. But to be honest, yeah, it looks pretty good to the downside.
Awesome.
Cool. All right, let's do another question. What do we got here? What's the best way to get started if I've never traded before? There are so many options out there. I'm not sure where to begin. Wow. What do you guys think? John C.
John C.
I love it.
Well, I would say don't trade until you educate yourself. You know?
Yeah, you need at least a base level of understanding. I think the paper trading is a great way to start. And I think one of the things about paper trading will not teach you the emotional side.
No.
Because it's not real money. Even if you tell yourself it is, you still deep down know it's not.
Yeah.
So I think that's important. But it helps you learn your platform.
Yep.
And I still make mistakes today where I'll forget to cancel an order that once I don't want the trade. And then later in the day, I'll be like, oh, crap, how did I get in this? And I'm in that trade. So that's more just a natural mistake that maybe I'm the only one that makes. But
I make it too. Yeah.
But, you don't want to click the wrong button at the wrong time when you're in trade, when you're doing real money. So learning the platform, that's why paper trading is great. And then
really identify what kind of trader you want to be. Are you going to be a crypto trader? Do you want to be a commodities trader? Do you want to be a day trader, swing trader, long-term investor? So identify what that is. And then there's here on the verifiedinvesting.com, you have lots of different services. And so just choose the one that works the best for whatever trading style that you want.
Yeah, and I think again we kind of covered this with the 20-year-old gentleman who asked about at 20, but it's kind of the same thing. Like education, start small, be dedicated, try not to get discouraged. The market will discourage you at times. We've all been there. In fact, we still get there. It's just the nature of the markets to want to break your will. It's
really
honestly that's the great way to describe it. Is that's what the markets want to do. They want to make you think the highest conviction you have. The market will make you think you're wrong at some point.
Yeah,
that's right.
But you know what I've learned is that it's really not about competition amongst us, your friends, or your family. It's not a competition with the market. It's a competition with yourself.
That's right.
It's all in your mind. If you can educate yourself, you are much better. You are much more likely to make the right decision than the wrong decision, because the more educated you are, the less fearful you'll be, the less emotional you'll be. And that goes for trading, investing, all of these different things. So, yeah.
It is a mind game. Like, there's no doubt about it that trading is a mind game, and you have to figure out how to conquer that. And I think the best way that I've ever figured out is to lower your share size, right?
Yeah.
Like the amount that you're investing, because there's a threshold where we all are like, oh my God, if this goes up too much, I'm going to freak out because it's such a big loss, or if you're short, or vice versa. And then there's a level where you could be in and you're just like, meh. Like once you have the meh attitude, you're going to think 100% logically about that.
Right.
This is my level. This is what I'm doing. And so, especially when you're starting, that's so important, because very little money will give you that adrenaline rush, which a lot of people get addicted to. They have to trade. They always have to be in a trade. And that's another thing to bring up, is that, the less we trade, honestly, the more we make.
The more we make.
Right?
And actually, the lower position size
more we make too.
The more we make, because we can act more logically.
And then we can let it run.
Yeah.
And then it's easier for us to stop out.
That's right.
That's right. It's so true. And these are things that, again, I want to tell everyone out there that's watching, is that you never become the perfect trader. Like, I still struggle to this day. We all struggle to this day, but you just get better and better and better. You'll make mistakes. We all make mistakes, but just be aware of that. Like, there's no magic bullet in trading where all of a sudden you're going to learn this one tactic and be a never losing trader. Doesn't happen. Markets are unpredictable, and they will make you question yourself. You just have to, again, it's position size, it's your mentality, it's your discipline. Those are the keys.
So that's how you get started.
Yes. in short form. Yeah. What a question do we have next here? Let's see what the next question is.
Welcome to Verified Investing. I'm Dr. B here, and today we're going to be talking about the 1-minute scalpel. This is a course that I've developed over several years, and really what I do is I start with the basics in this course: support and resistance, trend lines, moving averages, and we start in the daily, weekly charts. We zoom in a little further to the 1-hour charts, and then finally to the 1-minute charts, which is my preferred time frame that I use here in the Apex trading room. Had about an 80% success rate using this strategy. Rising wedge patterns, falling wedge patterns, parallel channels, all of these different techniques. And from there, then I teach how I maneuver through trades that go against me. I talk about where my stop would go, where I would add to a trade that has gone against me, and really over time, this has helped position me to have an edge in the stock market. I hope you enjoy it as much as I do. Take care. Buying at these high levels, right? You want to be buying after a big dip, a 15, 20% dip in the S&P.
But I think the big thing that people struggle with is, like, it never seems like it comes.
Yeah.
Like, how long has it been? I mean, since 2022.
Yeah.
So now it's been, 2 years. And for a lot of young investors, that's like forever. I mean, for us, it's not that long,
No,
but
it's not.
it goes fast. But I mean, some people, they got in 2023 where they waiting to get in. And it's just like, market never seems like it pulls back. So, like, I think the big thing is that eventually, like, when it does seems like it never will, which it kind of feels like now, right?
Mm-hmm.
That's probably when you're getting towards that point where you get a bigger pullback. And I think one of the things to remember is people have been programmed to buy on like a 2% dip, and it's worked.
Sure.
For years.
Sure.
I mean,
Absolutely.
but the market programs us to think that way, and then it flushes out those people. And so you have to just, I think the dollar cost averaging is like super important. I know with $1,000, it seems like, oh, this is so little money. Let me just throw it on one crypto and hope I can 100x it. But you hear about stories that people make a lot of money. That's 1 out of every million people.
Yeah.
Right. The majority of people out there will lose that $1,000 by betting on one thing, partially because they may be in the money 100%.
Yeah.
And then they're like, well, I want to make 1,000. Oh, I'm at 1,000. I want to make 10,000. They leave their money in there, and then inevitably things come crashing down.
I think the smartest thing would be to just, like you said, diversify into very good companies, solid revenue, solid earnings, companies that don't have a lot of debt, they have cash, and, companies that are popular and well-known.
The problem is that's boring.
That's
People
boring.
don't like to be boring. They want to
Yeah.
make that money fast. And
Yeah.
I think we all understand that mentality, but that's the mentality that's gotten me in a lot of trouble, to be honest, in trades. So it's, it's, for me at least, if I just had to answer the question, $1,000, I'd honestly put it in gold. That's what I would do. You're not going to make 100x on your money, guaranteed on that one. I mean, it's not going up 100x.
Even after this run, huh? Even at all-time high or close to all-time highs?
So.
Really?
I think so. Just because it's more about, like, it's either that or I'd leave it in cash.
Like you would buy physical gold, or you'd buy an
I think either one.
ETF?
If it's just 1 year, you probably wouldn't buy physical, because
Okay.
you take too much of a hit selling that. When you sell it back to a broker, they'll kind of give you a low end of the price. But I think it's just more that it's just, I don't. What else do you buy?
What
at
about
these levels?
What about shorting the S&P for one?
Yeah. I mean,
that
that's a
would
little more
be-
aggressive, but I mean, that's probably, if yes.
The probabilities are it would most likely pay more than a long in gold.
Yeah.
Right.
Yeah, probably. I think
probabilities.
20% pullback would be reasonable
So.
from these levels. But then again, I thought that 20% ago. So
Yeah. So did the majority of economists and
Yeah.
CEOs
Amazing,
and world
man.
leaders.
Amazing. So
Yeah.
So yeah, I mean, again, one asset with $1,000, treat it like it's $1 million if that's your 1,000, because that's the thing, it's all relative, right?
Yeah.
Right.
If you have someone that has $1 billion, to them 1,000 is equal to at least $1 million, right? And so you got to treat it as it is, and that's where diversification is the smartest move. If you're choosing one asset, try to protect it, especially with things as high as they are. The allure of an ARM Holdings. I mean, what have we seen lately? Like yesterday, ARM Holdings.
Yeah.
I mean, some of these stocks have gone parabolic. Micron.
Crazy.
But at some point they will come crashing down. And we did get some topping tails, like Qualcomm put in a topping tail. Micron almost did, but tagged a major trend line. I think we're close on a semiconductor pullback. I do. We'll find out. I mean, we'll see. Tomorrow markets are back open.
We'll see.
All right, next question. Let's keep it rocking.
So gold. was the answer.
From me. You guys, again, Dr. B said short the S&P. All right. Can you expand on the use of VWAP and your view on the use of the MAs as support or resistance during a trend, if any? That's a good question for you, Dr.
Yeah,
B.
so coming
Talk
from
to us about
Harge.
VWAP.
Yeah, so I've done a lot of research on VWAP, and VWAP stands for the volume weighted average price, and it's basically where the institutions are trying to buy and sell, equities, right? And moving averages tend to work sometimes, but I found that VWAP actually works even better than the moving averages. And as soon as I learned that the institutions are right, the money managers are giving the institutional traders the orders and saying, hey, get me a price at or better than VWAP. As soon as I heard that, I said, whoa, I've got to take a look at this, because that's where a lot of volume is moving around. So, I'm in the process of reading a textbook on VWAP and watching a ton of videos and learning about VWAP. But really, we've seen it play out in the Apex day trading room, where
Amazing.
it's a great area of support, resistance. It's a great level to take profits. It gives us, it also tells you who's in control. If it's below VWAP, the bears are in control. If it's above VWAP, the bulls are in control. And
What time frame, like time frame wise, it's not something you use on the daily, weekly, or monthly, right?
no, it really from the 1 to 10 minute charts.
Okay, so it's more for day traders.
Day
would be
trading,
the way
yeah,
you would look at it. Okay.
exactly.
Then are there different types of VWAP? Like what's the type that you use versus
An
what's
anchor.
Anchor?
Yeah, so there's the general VWAP that resets every trading session, right? And then there's also the anchor VWAP, which you can use intraday, but you can use it for day trade, long-term investing, and then swing trading. Because on the daily chart, if you use regular VWAP, you won't see any divergence, right? You won't have any alpha or edge. But if you use an anchor VWAP from a major pivot low, pivot high, that can be an area of liquidity and orders, right, from the institutions. So
Interesting.
yeah, yeah.
It's really fascinating stuff. And then
I'm going to have a course.
That's right. I was going
coming
to
up
mention
here.
that you're going to have a VWAP course hopefully out by August.
Yeah, yeah.
So that'll
That's the
be
plan.
really exciting. All the nuances of how to trade using VWAP in Dr. B's new course coming up in about a month and a half to 2 months. So that'll be fun.
Awesome.
And then in terms of moving averages, I've kind of shied away from moving averages unless it's like the 200 MA, just because I feel like there's so many people using it now that the success rate of it is becoming less and less. What's nice for me is when I have two factors and then let's say the 200 MA is right at that same point, it kind of just gives you extra confidence.
Yeah.
Comfort, confidence. And so that's one of the reasons there. But certainly I don't really mess with the 20 MA anymore, the smaller ones, for my trading at least.
So one way you could do it is you could take it, if you have the 20 MA, the 50, the 100, and the 200. If the 20 is above the 50, and that's above the 100, and that's above the 200, you're in an uptrend.
That's right.
When the 20 is below the 50, which is below the 100 and below the 200, then you're in a downtrend.
Strong downtrend, yeah.
So, and it's all about the separation of those. So that could give you an idea of when you're starting to reach your peak or your valley for a trade. So
Very cool.
You could use it like that.
Awesome. All right, next question. What are you seeing in the Nvidia chart, Landon? All right, let's take a look at this. I think all three of us need to get up for this one. Well, no, you guys can take over after I look. I'll look at this. So Nvidia is one that reminds me of some past major movers in terms of momentum, right? And I think there's no doubt this has been the fastest stock to reach $1 trillion and now 3 trillion plus. I think it's about 3.3 trillion ever, overtaking Microsoft as the world's largest by market cap company. So a couple things that I'm looking at here. So number one, it's kind of gone off the rails in terms of linear charts. I have used logarithmic now because it's gotten so insane. We can flip to the logarithmic chart and it does help bring it into a more intriguing perspective. Couple things to keep an eye on here. We have a couple charts here. This is one trend line that I'm keeping an eye on right in this vicinity, which would be almost into that level. Notice here on this chart, it starts all the way from back at this low in 2023. It goes right here and it hugs it right along that line. And then we had this is where the reversal engulfing occurred right here. That was the only pullback of significance really since this run here. And now we're approaching this area up in this range again. So that could be a potential top on the charts. But in all fairness, I've been way wrong on this. I always, this is the thing is when as a trader, you become very logical. When the markets don't behave logically, that's where a trader like myself, I'll be like, oh, it shouldn't go this high. Well, in reality, the logical action does make it go this high. You have the emotional chasing of charts, and you just keep on doing your analysis and saying, okay, well, coming up to the next level, let's see if this is where we get the reversal signal. And what I mean by the reversal signal is you get the reversal engulfing, and that gave us, I think it was about a 20% pullback in the stock. That was a clear signal right there that there was something going on. As of now, we don't have that in Nvidia. It remains ridiculously overbought. RSIs are insanely high. Divergences are there in some of the charts. But again, we don't have that specific candlestick that marks a top where you can say, okay, this is a top at this point. Couple other things to keep in mind, though. I will just remind people that, like I talked about this before, Tesla in 2021. I was short Tesla in 2021. I was out of the money on that. I ended up making money on it, right? The collapse was meteoric, 75% fall. It was the same sort of hype where I got in a little too early on that trade and ultimately had to wait it out, and it ultimately came in. Another good example of this, by the way, was SE. We talked about this one earlier, but I was short SE in the mid 200s, and this thing went up to 300 and change in this chart. And again, I just slowly dollar cost averaged on the way up. And when it obviously collapsed, we see where it went down to. It went down to these levels. And so when you have these kind of story stocks that create emotion, you get about 75% drawdowns on them when they collapse. And in fact, Nvidia in 2022 dropped about 75%. I think it was maybe 70%. But either way, it collapsed meteorically. In fact, we were long just above 100, which was just above $10 at current split rates. And we took a profit on it. But
yeah,
man, oh man, holy cow. But again, that was illogical to the downside. And so this is the key is like you look at these type of charts and the rollovers, and then everyone will tell you right now, like, oh, but Nvidia is different. Well, they said that about Tesla. They said that about SZ. They said that about Cisco Systems in 99. There's nothing that's different. Emotion is emotion.
Let's pull up Cisco actually.
Yep.
And let's just one thing I want to talk about. For those of you who saw my first episode on the Market Pulse.
You want to go back to 99?
Yeah, let's pull up a weekly or monthly here.
There's a monthly here. Here's the run in 99 or the bull run here. By the way, similar.
This is still in a log chart, I think.
Oh, let me change that out there. Good call on that.
So you can see, right? You can see here that you had this huge rise in Cisco stock and then a fall, right? And so again, for those of you who saw the Market Pulse, there's 4 market phases, right? You have the accumulation phase. You have the markup, the markup phase, okay, the distribution, and then the markdown, right? Markdown. And then it just repeats over and over and over again. You can see this is the accumulation phase, the markup phase right here, distribution, and then markdown phase. And then it's just repeated, right? Accumulation, markup, distribution, markdown, accumulation, markup, distribution, markdown. So the same thing, the same fate will happen with Nvidia.
Yeah, and right? I think that's a great point to even look at the Tesla chart in that same realm, right? So if we look at the Tesla chart, going back to that, you can see that same sort of thing going on here. In terms of that run up, we can flip to the weekly chart and see it a little bit clearer here. But the same sort of type of deal. So I think the end game is, I know everyone wants to believe it's different and AI is going to change our world. And it is. There's no doubt. It already is changing our world. But the same thing was for the internet. And I've said that before. And it doesn't change the outcome of essentially what happens with these type of things, and which happens with everything. EVs, we know that there's too much supply, margins contract. Eventually there's a slowdown. It was interesting. I mentioned this to you guys, but yesterday morning on CNBC, there was someone that was talking about, is Nvidia overvalued? And he basically said, yes, it's overvalued on every metric out there except for one, which is based on earnings growth rate. But the problem with that is that we know that as a company gets bigger and bigger, just the law of large numbers, the growth rate is going to slow down. Then you also take into account the competition. I mean, there's a reason why Micron I mean, all these other stocks are all running up because they're all competing for that same piece of pie. Now, listen, there's some parts that go together, and I understand that, but eventually it's the competition that really does it in, as did with Cisco. I mean, you had Sycamore Networks, Juniper Networks, you had all these other competitors with Cisco. Back at that point with EVs, we know Fisker, which just filed. Was that the one that filed for bankruptcy?
Fisker did. Yep.
Fisker just filed for bankruptcy yesterday. We obviously have Rivian. We have, I mean, the GMs and the Fords all are competing now as well. And the same thing will ultimately happen with Nvidia. The problem is you don't know when, right? That's the question. So I do see a 75% minimum drawdown in Nvidia. The question is, when does that happen? But I do see that same. I mean, again, if you just shut off that it's Nvidia and you put that chart up next to any of these other ones, it's literally a replica of them.
And one of the things I've said to you guys in the office is it really is an epic game of musical chairs, right? When you get this euphoria and irrational exuberance in the markets, again, just kind of blank out the stock name or the crypto name, and at some point, right, there's not going to be enough chairs left for people to sit in, and the stock is just going to crash. It's just not.
And I think that's going on right now in Nvidia because you see more and more retail FOMO versus early on the accumulation phase is much more the big institutions which have the foresight to see what's coming.
Yeah.
Right. And so one of the charts that's an interesting chart is AMD. So AMD was down again on Friday. It's only up 5% on the year.
Wow.
Yeah, and actually, in fact, let me bring that chart up real quick. I was looking at this chart, and it's a fascinating chart, and you can't help but wonder: is this a leading indicator of sorts, right?
Yeah.
So here you have Nvidia, AMD, right? And what we see here is you have this. You are at a little bit of support here, but if this level breaks, this thing has a lot of downside to go. But this was trading at the beginning of 2024. It was right here. So again, we look at this. And this is where it was at the beginning of the year. This is where it currently is right over here. I mean, up literally 4% on the year. That's kind of crazy because this was one of the run that this thing had from the end of the year into March. And by the way, what kind of candle is that?
Topping tail.
Topping tail, guys. Yep. So remember we were just talking about how you're looking for these signals, these breadcrumbs. Well, that's about as big as a topping tail as you can get. And look, it was right off. I don't remember what trend line this was, but let's go take a look and zoom out. Where was, this was a channel. Parallel channel. So let me erase these other lines here. I just want to show the beauty of these parallel channels, guys. Incredible stuff. So you had this parallel channel. You can see the little bull trap right over there in the last bull market for this stock. But again, right from this pivot, right to there, right through these lows right here, and then a topping tail that touches the upper end of that channel. That's some cool stuff right there. And so again, it's interesting. AMD again was one of the hottest plays. But now it's not.
One other point I'll point out about this is you have this topping tail, or I'm sorry, this head and shoulders pattern right here. Left shoulder, head, right shoulder. Here's your neckline. And really, if you look at the measured move here, if you were to take this, I'm not sure how to move this line down, but let's just say this is about the same distance. Would you agree?
Yeah.
So right around 130 is your measured move.
Yep. And then the channel will be sloping up little by little, getting towards that area too.
Right.
Yep.
So that's only about a 50% drop.
Just 50%?
Yeah. Well, I'm saying like Nvidia could drop,
Well, but this is the thing is that we'll have to, and this is something we'll have to keep an eye on, is if you already have AMD here and there is a slowdown in the economy and a slowdown in the data center and the AI side, you probably at least get a bounce here. I think we both agree, or all agree that we'll get a bounce there, but then does it break even there?
So I
go lower.
I do think a lot of this is a rotation of capital, right? You're having people rotating out of the second or third in line or the fourth in line.
Everyone wants to be in the top ones.
They're all going to the top ones, right? So they're going to Nvidia. They're rotating out of AMD into Nvidia. But what happens when capital rotates out of Nvidia and Amazon and rotates into cash or bonds?
Right.
That's when you will see a pullback.
Right.
And one of the problems with the money managers, on Wall Street is that they're having to catch up and stay with their friends. So what do? They buy the biggest names, because if they buy the best of breed and the stock goes down, they're not going to fault them for that.
Right.
But if they don't buy the best of breeds and their friends and their colleagues are up 10, 15%, there was a great article about this in Market Watch, and they don't buy that, they're going to be sitting there like, shit, I didn't get into those best of
Yep.
breed stocks, and my portfolio therefore isn't up as much as their colleagues. And that's who they're,
Which is really, to be honest, that's such a scary mentality of
yes,
like you're not buying because of value, you're buying because you got to be in the cool group,
right.
right? And that's
Well,
how
and you got to
people
show
get
your.
earned
You also got to show your portfolio
to the investors.
to the investors.
And the investors want to see that you are in Nvidia, right? I mean,
Yep.
it's so what you're seeing here is this concentration of more and more capital. And this is what scares me so much about the market is that so much capital is now in these top 3 stocks or 6 stocks, right? Same reasons you guys are saying, right? It's all that concentration. At some point, everyone, if something happens, everyone runs for the hills. It literally makes the market vulnerable to a stock crash. Like it does.
It does. Yeah.
I mean, those stocks, I mean, just imagine just a 10% drop alone in, let's say, Nvidia, Microsoft, and Apple in the same day. I mean, holy cow, the S&P would be down probably at least 8%, if not more.
And I think really what's it's gonna take is a cascade of fear, right? Once there's that big red candle on Nvidia, and once there's that, several days, several weeks in a row, people will say, okay, the top's put in, and what will happen? It'll just, funds will continue to sell, and that will draw down the market, in the process. And who knows if that's a geopolitical event over in the Middle East? Is it a commercial real estate event? Is it another pandemic? God forbid, So there's just so many different possibilities, but
wild stuff.
Yeah.
All right, let's go on to the next question. We'll see what the next question has here. Do you cover commodities such as wheat? What are you seeing in the charts? Yes. So wheat, I actually have a accumulation going on in the wheat commodity, and I'll take a look at this, and you gentlemen can kind of give me your insights on it as well. But this is in the smart money commodities. But if we take a look at the cash contract on wheat here, by the way, you can see I was analyzing here. If we bring this and clear that up, you can see I was already doing analysis here on this. But basically, I've been starting to accumulate in this lower range. You've got this pretty impressive pullback on wheat over the last month or so, and it's now entering into these levels. Like we just crossed the 618. We're now kissing the 786 fib. We have this top right here. So again, for me at least, this is where I have been accumulating with members of Smart Money Commodities and Miners on wheat in this lower level, just as a swing trade, mind you, but for some sort of bounce. I think it could go a little bit lower, so I'm ready to buy a little bit more down here. But to be honest, this is a good example of using the fibs to our advantage here in terms of giving us additional factors on the chart. And if we zoom out here, you can see there was a pivot low right here, and then this trend line right back here. But yeah, I mean, this is definitely, if we look at this bigger chart here, you also have maybe a little bit of an upsloping trend line coming into play. We can add that into the mix right there and bring it up right there. And you can see, look at the cross section right there. So really good level coming up right here. And so my goal here is just, I started super small right up here, added a little here, and then I'll add more here, accumulating right in this lower range for some sort of swing trade.
And how about this trend line from the left side of the screen there? There's probably a trend line
right here.
Yeah, coming right in.
Let's take a look.
Well, I would take it from those 2 pivot highs. Let's see. Yep,
right here.
There.
Okay.
Yep, and right there. Boom.
Yeah, right there.
Yep.
That's a great level on wheat. Yeah. So anyways, this is the commodities chart of wheat, the cash contract. But the nice thing about it is, and this is the great thing about the commodity service, is that I analyze always the futures charts. So anyone that trades the futures can buy wheat accordingly and do their futures trading. But then we also trade the ETFs, right? So there's an ETF, WEAT, which is the Tecrium Wheat Fund ETV, where if you don't trade futures, you can still get involved in that. And you can see the replication of the chart is essentially identical on that front. You can see that it's curved down just like wheat has as well. And so there's a lot. There's a corn one. Corn has one. Not every commodity has an ETF. They used to have one for cocoa. I wish they still did, because I really wanted to short it when it was up at those highs, but that's okay. But yeah, it gives you alternates. Some people don't have futures accounts, totally understand that, and they can still trade a lot of these things like Palladium, right? A lot of people probably today like, oh man, I don't have a futures chart, but I'd love to get into Palladium. Well, guess what? You can. PALL is the ETF that tracks Palladium here. That's what I'm actually trading. And again, if we look at this chart, it's the same general chart on Palladium, and you can see this is the ARB something, whatever, physical Palladium shares ETF. So like the nice thing about it is most commodities have ETFs that track them. All right. All right, next question. Do you guys use AI to pick your trades? Isn't that a better way to go than trying to review the charts and following the markets? From Sarah. Ha.
I'll let you
That's
comment.
a great question.
Well, so number one, AI is only as good as the humans that create it, right?
Mhm.
That's right.
So you just can't like you either have to get an AI from someone who knows what they're doing, and there's so much junk out there, guys. Like I want to stress that there is so much garbage out there. People selling, oh, this is an AI, whatever for trading. I would guarantee 99% of them are crap and won't work.
Yeah.
It's just it's a selling thing. Now, having said that, we've been developing an AI for trading. There's one for day trading that will launch in hopefully 2 to 3 weeks.
That's right.
Then we have one for swing trading as well. And it will be a one based off of all the knowledge that we have combined. And it will be self-learning from what I know as well. So it will improve over time as well. So I don't know when the swing trading one will launch. The day trading one will launch again in 3 weeks, hopefully maybe a month or two later, the swing trading one. But yeah, AI is a great tool if it's done correctly here. So,
Man, if we were public right now, our stock would be shooting
oh my
up.
God, seriously, man. Well, again, the beautiful thing about it is the AI can literally trade your money for you.
Yeah.
But again,
So,
you always
yeah,
have to, it's
With the
never that
proper base.
simple. Right.
Proper base.
Right. You need the factors, the inputs for the AI to learn off of. So it has to have that fundamental backstop. And then also, I always worry about AIs like when the unforeseen happens, like something that the AI has not experienced before, like a stock market crash. How does it react during a crash? Because literally you could be doing great for 6 months using an AI, stock market crashes, and you could lose everything. Because if the AI is not programmed in how to handle that, like let's say, like in our AI, I would assume that if the market drops a certain amount, it just shuts off.
Yeah,
there's going
to be a cutoff.
There's a cutoff, right? And I think that's really important to have because there will be scenarios. There's no doubt there'll be scenarios in the future that we don't.
What
see.
about like a glitch in like Berkshire Hathaway and stuff like that,
where it
looks like it dropped 99%?
That's right. Little things like that. So
Bye.
so it's never like, I think the one thing I will say too is that AI is fantastic, but I don't want people to also think like, oh, I never have to learn anything again because AI is here. Like I always think that personal knowledge is the most important thing, and then using tools. Like you're a doctor. I mean, like, you have to learn everything, but then you have tools that make you better.
Yeah.
So that's the key.
For sure.
Cool. All right, next one. Do you ever combine multiple charts to get a better picture, like silver and gold and dollar and TLT? What do you guys think about this?
Silver, gold, and dollar. Well, I think it's really the macro picture, right? Is gold breaking out? Where's the DXY? Where's the 10-year? Where's the S&P? Trying to put all of that together and form a macro picture. Yeah, absolutely.
Yeah, you can definitely.
Yeah, I think one of the things to do is what I would do is look at gold's chart and see if like the dollar. So we know that the dollar, when it goes down, generally causes gold to go up. So if you see something on gold that makes you bullish on gold, but then the dollar, let's say, is not confirming with a bearish pattern, you may just say, wait a minute, let me just give this a little more time to kind of figure out. So I think that's the key of using, like we use multiple time frames, we use multiple tools. The same thing can be used for certain charts, like a gold dollar chart. Also for the market, like things that give you additional knowledge. It doesn't necessarily make you do a trade, but at least it gives you more insights. Like for me on the stock market, I'm very hyper focused on the dollar yen chart right now, the bond market. Like little signals that can give me more insights into maybe a top on the market are important.
Yeah.
Yep.
Cool. All right, next one.
What's next? Yep.
ANF has had a great run and is consolidating a bit. Do you see a bullish or bearish wedge? You want to take this one? One of you guys?
Go ahead, Ben.
Okay.
What a run on that thing, by the way, on ANF. Incredible.
Abercrombie and Fitch. They have AI in their genes, I think.
Oh yeah,
that's why the big run. No, they've got
is that where you say, are you excited to see me, or is that just AI?
in your pants?
Yeah.
Oh, geez.
Yeah, that was bad, but we got to do one of those a day.
That's right. Okay, so I'm gonna go ahead and see this. Draw a parallel channel. See if there's a. So I don't see anything here. All right. So what I will say is you've got this sideways consolidation.
Hey everybody, welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term.
Bias. So what I was looking for, and right now we kind of have it, is you put in a top or a temporary top, and then you have a trend line. So if you can stay below this trend line right here, this downsloping trend line, then it can still continue to roll over. Right now, you do have this up move with sideways consolidation. So this could be considered a bull flag. So you just want additional, so you got 1, 2, 3, 4. You want a couple more days. And then if it breaks above, then you can have another move to the upside.
And then probably the idea would be it would go back to that line, right?
Right.
Go back, hit that line again, be rejected again. The idea is.
Yeah, let me drag this out. I know you guys aren't seeing that. So that would be probably where it goes next. You're looking at probably around 220.
So, and where would failure be? Like, so if you got below, if you had a daily close below the wide range green candle, that would be 100% failure of the bullishness. Right?
This, yeah. So you close below basically 150, 155, 156 area would be a failure of this bullish pattern.
Yep. Nice. And then in terms of support, like let's say it does fail, where could we potentially see it going down to?
So you have this minor gap fill right here. And then you've got this pivot top, which is where I would be expecting support.
Right there.
So yeah, 139, 140 area. So you've got this pivot top right here, and that's going to have lots of support. It kissed it right here.
Yeah.
And then you've also got this green bar candle, and it looks like it's a minor gap that could be filled. But right in this area would be where your next support would be. If you start, sorry,
no, I was just gonna say when you get a chance and you can continue, but just do a fib retrace too. I'd be curious if from the beginning of that low right there, if there's a fib in that vicinity or what fib would line up. And you guys are seeing us do this real time, right? I mean, I think that's important. Is like, you know, we haven't looked at this chart in a while, and yeah.
So there's the fibs. It doesn't really look like, yeah, 618 is just a little bit higher. So, you know, it could offer you significant support as well. There's a 50% retrace. It's right above that gap fill, which to me tells me that you are going to get a decent bounce. You probably have a moving average or a couple there as well. Probably the 200 MA is probably sitting right there. So you can expect a bounce right there. So what I was going to say earlier is if you get this continuation of a rollover and you start breaking this green bar candle right here, then I can see like more of a cascade, like kind of a waterfall. And the support though is going to be 155 in the short term.
Yeah, it almost looks like, last thing just to mention is it almost looks like you're making a little bit of a wedge here. If you want to just, here, I'll just quickly draw this in right here, right? So if you take that low right to those here, and you're just right on that right now, you closed on Friday right on that. So that could give you a little short-term breakdown. If you get below that, you might actually come down to that level Ben was just mentioning, and then this one here, and then really this is the big one right here. But yeah, just that little upsloper right there with this, there's creating that flag pattern. Can it break out, right? Or does it break down right there? Be interesting to see.
Yep.
Cool, man.
So to answer your question, right now it's more bullish, but you need that break of that line, more continuation, and then it turns bearish. So
cool. All right, next question. Hey, Gareth, been a member since Hey, folks, nice. That's going back a year plus. When connecting trend lines, when is it appropriate to cut through wicks or body candles having a tough time identifying accurate lines? That's a great question, right? So this is really where you get into the nuances, and it does take years to kind of develop that skill. The way I look at it is the line has to make the most sense. So, in other words, you want as many pivot points, wicks, or the exact top of the candle to be connected. And sometimes that'll mean that it has to slice through one, like we saw in these kind of like these fake bullish breakouts or bearish breakdowns. Sometimes that does occur, but it's about connecting the most. Think about it like this: when you look at that chart connecting the trend lines, it should be like, wow, look at that. It shouldn't be like, oh, it just connects through 2 points and there's 3 pivot points that miss by an inch, right? There has to be something more there that connects more points of interest. Or what you can also do is channels. Channels have been my secret now, is that use a trend line that use the channel tool, and you drag that channel up or down and see what other lines or pivot points it attracts to, right? Where it tags it.
Yeah.
And that'll give you, to be honest, if you find one, even if it's just connected to 2 points, but it matches up with 3 on a parallel, it probably is significant to watch.
Can I respond to this by pulling up a chart?
Yes, please do.
All right. So
I was just noticing that the midline right there of that Abercrombie and Fitch is a great example because it lines up through charts.
Yep.
And then it hits the bottom of the green candles, and then it pierces. So it hits bodies and wicks.
Yep.
Yeah.
Very true.
Yeah. All right. Let's pull up Tesla's chart. So Tesla had an amazing bounce here, right? So we had this huge fall on Tesla from, around what, 300 all the way down to $140. So 53% pullback. So Gareth already has this trend line here, but check this out. So this is a trend line that actually cuts through price. Look at this. See this? So you have this. I'm going to just delete this so we all know what we're looking at. So you have these couple pivots here. Let me make sure I'm. Tell me how I'm supposed to do this.
Just hit that one. Yep.
This one?
Just give it a second before you
a second.
touch. Once those
There we
things
go.
pop up, now you're good.
Nice. All right. Pivot low, and here's your bounce, right? So there's a couple others here though. If you look at Tesla, I think there's another line.
So right there, it does both, right? So you've got the wicks or the tails on the Tesla chart, but it also runs through the body. And so in that situation, it would just be that happens to be the trend line.
Yep.
So it's pretty clear.
So I just drew this line, and what Gareth said is actually really important, right? So what makes the most sense? So really what that means is where are the most hits where's the line that has the most hits,
right?
And you see a pierce here. You see here's the cutting through price action. Here's a perfect hit. Here's a kiss. So you have
on both sides, and I think that's important. The line can work both ways, and that even tells you it's accurate when you get hits on the other side.
Right. So you have a pierce here, but a kiss here. They're both hits, right? So here's where all of these lines converged, and that's where you had your 40% bounce. So,
yeah, incredible bounce. It's a great chart.
Yep, awesome.
Now, what are you seeing just before you go away from this? We have a lot of people out there that love Tesla, love trading Tesla. Do you see upside or downside from here?
I think there's probably a little more upside. If you take a look at, let's draw a little parallel in here, and you take a look at this parallel line that I just drew. There's probably some upside to about here. And the reason I say that is you have a couple other areas here of resistance, right? You have this area of resistance from this pivot low. You have the top of this trend line here. And there's probably also a Fibonacci level somewhere in here as well. So yeah, probably
the upside short term.
Yeah, like
that makes the most sense. Yeah.
Yep.
Yeah. A little bullish consolidation potentially there too on the chart.
Right.
The last couple weeks. Cool. Awesome. All right, guys. Fantastic. Hope you guys got a little something out of that. That was a great explanation on trend lines and where to draw them. And again, it takes a lot of practice and the eye gets trained. I mean, I think the one thing that happens is now I can bring up any chart, and weirdly enough, my brain almost like connects the dots before I connect them. It's just your eye starts to see and just see the lines. Oh, that should be connected there. Okay, this should be put here. And before you know it, you have some cool chart analysis going on. All right, next question here.
Can I say something real quick?
Yes.
So sometimes it changes, right? So you draw a trend line, and as price action changes, your trend lines can change as well.
That's right.
So don't get stuck on, oh, I drew this trend line, this has to be it. No, as soon as you get more information, it can change. So
that's a great point. I've done that many, many times where I've drawn a trend line and it made sense at the time. And then I got another pivot point. And I'm like, wait a minute, if I just adjust this, now it connects through all these points and it still makes a lot of sense. In fact, more sense. Yep. Very cool. All right. Next question saying, how do you stop out? When do you stop out? Do you have a max loss amount? Yeah, that's a good question. I mean, Dr. B, you in the day trading room are unbelievably disciplined in terms of your levels. You kind of, you go into the trades already with like, okay, if it fails based on this.
Yeah. I'm an athlete, right? So I like to win. And, I've learned how to take my losses both in sport and also in trading in stride. And part of that, for me is just not getting drawn down. And I think the key is for me trying to figure out where the level is, how many times do I DCA in and where do I take my stop, right? It's a constant battle that I work through every day.
Me too, yeah.
And sometimes it works for me, sometimes it works against me. But I think limiting your losses is key. Sometimes, again, if you stop out and you didn't continue to DCA in that trade and it goes in your direction, you miss out on profits and you've taken a loss on that trade. So that's the toughest thing to spar with. But that's kind of how I, in terms of where my levels are, I'll look for pivot highs, I'll look for pivot lows, I'll look for wicks or tails on candles.
Yeah.
And really the areas where the pattern has broken out and gone against my thesis.
Mhm.
That's the key.
That's the key. Yeah.
When do you stop out? When your thesis is no longer
invalidated.
Yeah.
Yep.
And I think that's always the thing that I've struggled with the most is that at least on swing trade, day trading is a little easier because it's like, okay, here's a topping tail and we're playing this based on that. All right, closed above. But for on a swing basis, when you're swinging and you have a macro thesis, like that's where for me some of my losses come in is you have a macro thesis that is based on a bigger decline, let's say in the US economy coming in, and it's like, okay, well, it keeps going up, but the macro thesis should still play out. And that's for me the toughest thing.
Look, I mean, even though you've been doing this for 25 years, you're a human, you're not perfect. I worked with a lot of docs who had practiced for 20, 30, 40 years and they still made mistakes. They still miss things. So it's humbling.
The one thing I will say is that what I'm very good at is even if something's gone against me, let's say I'm out of the money 25% on a trade, I'm not stuck at that entry and making a profit on it. So like I'm very aware that the more something goes up, if it pulls back, let's say, and I'm still out of the money 10%, but it's hitting major technical support, at that point, I'll cut it. And I'll just be like, okay, this is an exit. We took a 10% loss, better than where it was, but that's now support. And then it bounces and it always gives you that chance to maybe re-enter that trade on a short or a pullback on a long.
Well, that's a key concept taught in the Winning Trader series, right?
It's
sometimes a loss is a win, right? So minimizing those losses or just taking a break even is a huge win when the stock goes against you or the crypto goes against you. So
absolutely. Yeah. All right, next question. Do you think memes are here to stay as a way of funding? Wow. I mean, I think that human nature always wants the next meme. We always want to find, or at least there's always the get rich quick. I at least personally think that, you saw this same kind of thing happen in the .com bubble. These companies that literally were started out of their parents' basement got ridiculous valuations. They just, all they did was put a .com on the end of their name, right? So it was like, like shoes.com or whatever. There was a pets.com, right? I mean, there's like everything and all of a sudden everyone would just rush in and they'd go up thousands of percentage points. And then here you have crypto now in terms of memes, and we have GameStop and stuff like that. And so in periods of euphoria, memes will work. The problem is it's musical chairs. once
I was gonna
that
say,
once
yeah,
that once that music stops, you got to run. And you could even see it just recently on GameStop. I mean, that thing
Yeah.
traded. I mean, man, we were shorting that thing in the 60s at one point, after market or in that
60,
night. Yeah.
64, 65.
Yeah, and here it is in the 20s. And I saw DJT yesterday was down another like 20%
Yeah.
after hours.
Yeah.
A lot of these meme stocks are getting pounded, and the stock market's still at all-time highs, which is
Crazy.
incredible. Just imagine when the stock market actually has a decent drop to it.
Yeah.
So I think again, it's nothing against doing a meme stock. I have nothing against people that invest in this stuff or crypto. That I think you just have to be realistic, and it's all about capital deployed.
Mhm.
Like, I want to gamble. I go to the casino. Heck, we're going to Vegas in a few weeks. I'm going to go gamble. I know the odds are against me. I know I probably will lose. I'm still going to do it. But I'm going to bring a select amount of money that I'm willing to risk.
That's right.
And that's the key. Is it's one thing to put all your money into a meme and really pray for that 1,000x return, or put $100 in it, and maybe you can make a lot of money if it goes up 10,000%, but you're not risking your entire portfolio.
You know, and to that point, I want to jump in. Sorry, Ben, if I'm cutting
No.
off your
No,
answer here, but I'm not sure if we answered the question about is there a maximum limit. So we watched
you
the
go
video
back to the last
question. Sorry,
Okay.
sorry if I was
last question.
yeah. So we watched a video recently on YouTube, and they talked about how you should set a per symbol stop limit, right?
Correct.
Like if you're down more than a $500 on a stock, you really should, and whatever your level is, maybe it's 5,000, 50,000, $5, whatever it is, that's where you should be disciplined and stop trading that stock. So, at least for that day.
And I think in that point is, we've even isolated and become more disciplined from just 6 months ago, right? Where we're becoming very cognizant of the volume in the market,
Yeah.
and how light it is in the afternoon. And so, there was a point where the volatility was enough where we could do some trades in the afternoon. And now it's gotten to the point where you almost can't, or if you're doing it, you got to just go long on a pullback to support and just let the market float up, because that's what the markets are doing right now.
Right.
And so it's understanding the situations. And one of the things Ben's really, you've harped on this with me even, but it's like, if you're up, like, let's say I'm up 10K for the day on day trading, like, don't give back more than like 2K of that. If that's, you can play a little bit with that and try to make it into 15K, but you gotta always walk away near the highs of that daily P&L.
That's right.
So good stuff. All right, next question. Oh, here's one. I'll let you read this one out since it's to you.
Okay, Dr. B, I bought Dr. B's 1 minute scalpel course. It was great. Would you ever consider doing a live 1 minute trading room? Plus, where do you trade the 1 minute for crypto and stocks, where they don't start the trade at a different price than entry? Thank you, Tina. Well, thank you, Tina, for buying the course. I'm glad you enjoyed it. We've talked about this. We've talked about, branching off and starting a separate trading room. And we may in the future, but I think right now, the combination of us together actually is probably better than just one of us alone. And I think it's really teamwork. Gareth will find a level, I'll find a level, Ben will find a level, and we put that together. And I may have a trade that develops on the 1 minute, but that day the trade may develop on the 10 minute, where Gareth is more comfortable. So yeah, great question.
Yeah, it is. And I think eventually, like, we're in the process of getting a crypto day trading room set up, that'll hopefully be live in a couple months. So stay tuned for that. But I think you're 100% right, is that the Apex Live day trading room. So I used to do the mornings by myself, and Nick used to do the afternoons. Nick is retired. Ben came on with me, then you came on with me. And now the three of us in the morning, and you can ask anyone that's in that live day trading room, it is fantastic. The amount of trades compared to previous years or more, the accuracy is amazing. The analysis from all 3 points of view, looking at the 1 minute, the 60 minute, the 10-minute charts, it just honestly gives the best product. And I think that's, again, just going back to the idea of what VI needs to be is, even since I put my services and launched a commodity service on VI, I used to do one video a day and maybe like a trade here and there. I literally do 2 videos a day in each service, and chart posts throughout the day and trade alerts. Like I don't know, man. It's just like I'm giving it my 110%. I know you guys are too. And I want VI to develop into that place where the traders that are here are the best traders in the world, the best investors in the world. and we give out everything. Like, the most we can give is into that service so that people that are here not only have all the free stuff that we offer on the homepage with all the assets there, but then just if they decide to join a service, man, it is far above any other service out there in the world.
So if you want to join, he trades the 1 minute charts.
Yeah, in the Apex live day trading room. He does.
Apex live day trading room. So you should come join us.
And he shows his screen and he shows you everything he's looking on it. I show my screen.
That's right.
Ben shows his screen. Like, yeah, it's all there, man. And the beauty of it too is we talked about how the afternoons are quiet, but now you can ask, if you've taken the Winning Trader series, you can ask questions.
That's right.
And I was just going to mention, because we brought this up before about the Winning Trader series, is that don't buy it right now. I know that sounds crazy. Probably people are like, oh my God, I can't believe he's saying that. Because we're going to run a sale, probably 60% off in late July. And we're actually making up a new holiday.
That's right.
How exciting is this? It's Trader and Investors Day.
Well, okay, all right.
And we're gonna just make this into the new holiday that celebrates traders and investors. There isn't one yet, and there's always holidays, and we need one for us.
Hey, there's a Doctor's Day. There's got to be an Investors Day.
That's right. That's right. So look for that, guys. But my point being is, don't pay $10K right now. It's yes, is it worth it? Yes. Will you learn these tactics and ultimately make a zillion times that? Yes, but get it for 60% off in about a month from now.
Cool. That's right. Yeah.
How much more time do we have? Let's see. We got about 10 minutes. So let's do two or three more questions, and then we'll close out here. Let's see what the next question's coming through. When did you know you were good enough to stop learning and focus 100% on trading? Okay, so I am not good enough yet to focus on just trading and not learning. I can admit that. Is there a percent of wins I should be shooting for that lets me know I'm good enough to stop putting so much time into learning?
Don't
No.
ever stop putting time into learning.
You've got to continue to learn.
Yeah. There's nobody
no way
in any
around.
profession who's ever has been at the top level that stopped learning.
And I think the markets are always changing too. And I think that's where, like something like we talked about the meme craze, like there will be a point where it starts to be like 08, 09. And, you could have great earnings in a stock and the stock might just go down anyways because sentiment is so bearish out there, right? So we always have to be on the top of our games. Remember, you are competing as a trader and investor. You're competing with everyone else out there, including institutions with a zillion times more money than any of us have. And if you are not on the cutting edge, they will eat you alive.
Yep.
On that note, there's a couple things that I like to remind people. So number one, as day traders, we're not trying to be kings of the castle. You guys have all seen the National Geographic videos of sharks, like those whale sharks swimming, and those little feeder fish that kind of attach to their underbelly. That's all we want to be. That's all I want to be. I know that sounds weird, like, oh, you just want to be that? Absolutely. Because the money that the institutions will let go by the wayside, like the food that those fish are eating, is millions and millions of dollars. I can't compete with Goldman Sachs. I just can't. I'm not going to try. I just want to be the feeder that's on the underbelly of that, taking the little scraps that they're letting go. That's fine by me. That'll make me a very, very wealthy person.
Or you know what? If you're a surfer, right, the wave or the institutions, we're just the surfer.
That's right.
We're riding the wave.
Riding the wave. That's right. So, that's right. And then again, going back to just education is there's really always more education that we can make, that we can learn. And again, I think as soon as we stop learning, we'll decline in terms of our abilities.
Yeah.
And so, by the way, learning doesn't have to be just in a book, though. I think that's important. Like maybe Tevin's mentioning that in terms of like, do I just have to keep reading all these technical books? At a certain point, it's just looking at 100 charts a day and analyzing them, and your education will continue on that front.
And analyzing your trades that you took and why they won, and
especially the mistakes.
Right.
So
that's what we mean by
and to be honest, it's bringing other great minds in. Like Dr. B comes in and he starts looking at the 1 minute, starts looking at VWAP. Those are things that I never did before, and it's just using that knowledge. Now I have another asset to look at and utilize to help me make money. And it's just like, again, the curve for a trader in terms of profitability, it's down initially. Then there's a period where it's kind of like choppy flat, right? Where you're a break-even trader. And then it goes like this. It slowly goes up with a few little blips along the road. And over time, it just continues. Like, this is what you want. You want that up and to the right type pattern, where as you learn more and you get better and you hone your skills, you just ultimately make more and more money. Your ratio of winners will, when you're a losing trader, maybe it's 50-50 or under. When you're a break even, it's probably got to be 60-40 because, again, we generally take bigger losses than our wins. That's just the nature of the game. but then eventually you get to like 80% win rate, 81, and then it'll start going slower, but it's still, you still want to ratchet that up to as high as you can do throughout your trading career.
Yeah, and really, we're playing the long game here. We realize, that most people who make a fortune don't do it overnight, right?
Yep.
It takes years of effort, persistence, you know, determination, mileage, study.
Just like any profession, right?
Yeah,
I mean,
exactly.
you
Same
didn't
thing
wake
as
up
medicine.
one morning and say, "Hey, I'm going to go into surgery, be a surgeon today," right?
Yeah,
I mean, it
takes
took a lot of study
a
and
lot of
work.
time. Yep.
And that's any career path that you're going to really do well in, honestly, takes a lot of study and work. There's just no way around it. So, good question though. All right, next question here. How much initial capital do I need to get started full time on the Apex live day trading room? So this is a tricky question because in the US they require for you to be able to day trade, meaning more than three a week, I believe is the criteria. You need 25,000. In general, when we say this, it's you want to have a little cushion there because you don't want to do one trade and lose $100 and be shut down because they will lock your account down.
They will.
If you go below. So I would, in general, we suggest probably about 30, 25, 27 to 30 to have that cushion. But if you're out of the country, the rules are different. There's plenty of countries that don't require it to be 25. You could do 5K. Generally, you have to be able to make sure that what you're able to make, at least makes you some money. So I think that's really the caveat there. In day trading, you get 4-to-1 margin in the US. So you have, if you have 30K, you have 120 in buying power, which is plenty of money to do really well in the Apex Live day trading room. But again, there's also prop firms, right? You can go. That's how I started. Prop firms, they have higher fees usually. You're always paying for the leverage somehow. But I went with 10K, the only 10K I had, and I put it in an account. And they gave me 50K to trade. That was for me. Now these days, that's like no leverage. People are like, only 5x leverage, but in trading, it's good to not have a lot of leverage, to be honest.
Well, the other thing too is if you want to join the Apex day trading room, you can start with say $1,000, $10,000 if you're under that 25,000 limit, and just take your 3 trades for the week.
That's true.
And you'll learn a lot, and hopefully your gains will pay for your month, and then you'll be.
I think that's such a good point. Is that the live day trading room? Everyone focuses on like how many trades can I get,
right?
And generally, we probably average 2 a day, most of them in the mornings. Like if you have 2 hours in the morning, you'll get 99% of the trades that we do the entire month.
Yep.
But it's the other times where we're analyzing and you're looking at our screen and we're drawing trend lines and we're analyzing charts and answering questions that, to be honest, that's to the value, right? That's
education.
That's like a webinar course for basically 8 hours a day, almost 7 hours a day for 20 days, 20 trading days a month. It's incredible in terms of the education. And people that have been swing traders that have then gone into day trading, they're like, holy cow, in 1 month, I learned more than years of just swing trading because you're inside the action constantly. Market's doing this. Look at this pivot. Look at this trend line resistance. Why are we talking about this level? It's all that knowledge that comes through. So pretty cool stuff.
Yeah, very cool.
The other thing to just mention in regards to the Apex Live day trading room is don't come in if you're going to start it. Don't come in and be like, oh, I have to make X amount of money. To be honest, if I could tell people how to start, trade 1 share of a stock, even if it's a $5 stock, just do 1 share to get your feet wet. Understand how you call out your trades. I call out mine. Ben calls out his. Because in the beginning, if you do too heavy and you're not used to how I call out my trades, now we're all very direct. We say our exact entry price. We say, is it a 1/10 position? Is it a 1/6 position? Whatever it is. But again, when you're first coming in, you could be a little flustered, and you don't want to be flustered and make a mistake on your end early on and lose a lot of money. Get familiar with it. I always say, like the first month, or actually the first week or two, sit back, don't trade at all. Just listen. Then in the week 3 and week 4 of that first month, start doing small shares, work your way up. That's the real way to become a pro.
Yeah, I agree. Yeah, well said.
All right, let's see. One more question. Let's do one more question here. Is it possible for Verified Investing to offer a service in the future where we can send our charts and analysis for feedback?
Interesting.
I think there's always a possibility of that. I think that's an interesting idea. Maybe a per chart fee, like kind of a few bucks to get a chart analyzed that person specifically wants. I think that's possible. So I love the suggestions. And by the way, I want VI to be a website for you guys, right? Meaning that if you think something and enough people suggest it, we're going to add it. Like there's already new changes coming to the homepage, additional things that we're going to be showing on there. The option service, we're working on that because we saw that people wanted that. And so again, you guys need something or want something on there, let us know. Reach out to us, send us an email. If we get enough interest in it, we'll bring it to you guys. Absolutely.
Awesome.
Awesome.
Yeah, it
Well,
was a great session.
it's a great,
It was
guys.
fun.
2 hours. Wow.
I
it
know,
flew
by. So as always, guys, the Verified Pro Traders Live, we might try to do this on some other days where the stock market might be closed. I think give us your feedback as well. Did you find it useful on this front? Would you like to see more of this type of stuff? Because honestly, I love talking charts. You know, heck,
awesome.
man, I'll be in bed at night messaging you guys. Look at this
That's right,
chart.
yeah.
You guys do the same thing. So we're always talking charts. Again, check out Verified Investing, guys. Look at the services, the courses, all the stuff out there. Come to us, and we hope to live up to everything that you hope to get from an educational source on investing in crypto, stocks, and commodities, and even Forex and futures, and you name it. Have a wonderful day. Go enjoy. We will miss you, but we'll see you tomorrow in the Apex Live Day Trading Room, making money there as always. Take care,
Cheers.
guys.
Take care, guys.